and I'm sure most of you in the room heard me talk about it, and we look at pockets, right? But for those who are guests, um, pockets are where there's major reversals, and when the market coils until they break out, they're to be respected, right? So, let me just do this. Okay. I found years ago that how important reversals were. In the pit of the exchange, um, back in the day, there was no electronic trading, right? And the nucleus came from the floor. That's where all the decisions were made. Where today, of course, uh, we have electronic trading that levels the playing field. So when we were on the floor, I gave this name pockets, and now it's become part of everyday talk with traders, which is fine. I don't care. It's not some secret, uh, sauce. It's just what I created years ago. And that's where the market reverses, spikes, and shows a solid reversal. And when there is no clear direction and the volume is starting to subside, especially around lunchtime. So we'll talk a little bit about pockets just right now. Um, so if you were to look at these reversals, look at this one here. Pre-market, we went back up to it and tested it. And then when we opened, we made this low, right? And so you have to look at these reversals in a way that if the market sharply turned and could not take it out, there's a reason for it, right? When we made this low down here, right? You look at this, there was these volume candles, by the way, on Photon Trader. I created because it's the only way I can duplicate what I saw on the floor by seeing the volume expand on these 5-minute bars when we're moving. And on retest, it's really important. And then also to see how the market behaved on these lows. Well, you can see we had a big volume candle on the low, came back down with decent volume, could not take that out. When we got back above it, that was it. Okay. Then the market went to the other side, tried to rally a little bit, and they shake out all these shorts that tried to press it, right? But what did it do? It came right back to the inside of this pocket. I call it the inside. You'll hear me, talk about it. And that's like the conservative play when we come into it. And you can see what we did. We came right to the inside of this pocket. So once we took out this last pocket to the upside, reversal, call it whatever you may. I like pocket for a reason, and I'll tell you. And we had this test, too many X's here. Let me just, okay, I'll blow it up a little bit just so you can see it. So big volume when we made the low. On the retest, higher low with good volume on the reversal, and then back up. Came back down to where? The inside pocket, right? And you can see over here, we tested the inside pocket with even less volume and conviction. So then the market finally said, I guess we're going higher, right? Now, remember up here, this last reversal and retest, that's where, we're kind of retesting right now. So market either is going to get above there or not. If it does get above there, I look at over here, we got a single prints from the overnight session. We get above those pockets, those reversals from the pre-market. We're probably going to the high volume node, that 46 next stop. That's why I originally put my pivot at 41 because of this, right? Now, if I didn't confuse you enough with all these arrows, sorry about that. 1991, it's a funny story. Some of you might have heard it. So Linda Raschke became a client of mine. Now, she was a client for 15 years before we even dated. And then, full disclosure, we ended up getting married. But in 1991, she came down to the floor because I used to execute for the big funds. And she heard that, and she was a decent sized fund. At that time, it was a $30 million fund, so it was respectable. And she was doing 100 lot S&Ps, and she wanted a good execution broker. So when she came to the floor, she came to meet me, and I said, sure, I'll give you a direct line. And previous to that time, I've worked with Paul Tudor Jones and Louis Bacon and Toby Crable. And so, that's what I did. Now, besides I traded for myself, I had an execution operation. But Linda called the floor once, and back then there was no electronic trading. The charts are kind of one-dimensional, but you don't know really what kind of volume is going on the floor because they didn't have real-time volume displayed from the floor. It was 3-day estimated volume. So what happens is that this estimated volume was incorrect. So the only way to get a good read on the floor is to have someone on the floor who is watching the pit with some experience to tell you who he's buying, who is selling, is there volume, is it locals, meaning member traders, So that's why these volume candles on Photon for me are, but regardless, you could see volume profiles are important for me. And where I was going with this is 1991, Linda started with me. And she goes, what's going on? What do you think? The first thing I said is, I think we're going into the pocket and we'll probably hold. And she goes, pocket? What's a pocket? Well, it's basically a V-shaped reversal that was, defined, with some pretty good volume. And now we're coming back into it on light volume. We're probably going to hold the pocket. So it's really the reversal of the last low that we had. And for the most part, unless there's extremely good volume and momentum and bigger volume than the last time we tested it, we're probably going to hold it. She goes, oh, I never heard of that. She goes, why do you call it a pocket? I said, well, when you think of a pocket in your pants, right? And this is a guy speaking, of course, and you put in like 10 quarters, let's say, you expect it to hold. But if you were to put in 30 quarters, right, chances are it's going to poke a hole in the bottom of your pocket and then fall down into your leg or pants leg. So it would take a lot of volume to break a pocket. So I'm assuming that every test of a pocket, unless there's good volume, good reason to believe we're going to take it out because of the volume and the internals and everything else, I'm going to do the opposite. So the only time I look at pockets are on slower times where the market starts to coil. That's the best time to look at pockets. That's where you could sell highs and fade lows. But in a trending market, kind of like what happened in this gold, right? This is right at the pivot. You see the volume picked up, lower highs, red, big volume, and continuation until here. We had a volume climax, and then the market just kind of bounced. Doesn't mean it's over. But the point is, you could see that there was no reason once we broke this the 72 pivot to believe that the goal was going to hold until you see some reason for a possible turnaround. Now I felt like right around here that would look like it was going to go higher. Maybe try to bounce because we were running out of steam to the downside, but it didn't have too much of a bounce. So pockets are important for me to look at. especially when the market's kind of trading sideways. And when I say trading sideways, there's a lot of price overlap, loss of momentum, and loss of volume. So, there was a question that I wanted to get to that Scott had, and you know, hang on one second. So what Scott said or asked was, I use the saying, it's just the next trade in front of the next 10,000 trades you're going to make. So, part of that reason for saying that is you don't get hung up in any one trade at all, whether it's profit or loss. You can be a little too euphoric when you have 3, 4 great trades or something. Um, but you take one trade at a time and just don't press to make all your money on one trade because you want to or need to. So when you have, a couple of strings of losses in a row, one thing that I felt helped me years ago, uh, actually in the 90s after the crash, I started thinking like, well, I really need to, find ways to protect my profits and my assets, right? So, with that being said, there's different things we could do, right? One is, if you have, let's say, if you're trading, you're a day trader, let's just say, and basically 5 setups in a day on a 5 minute would be a pretty decent day if you had 5 trades, win or loss, if they're, in general. But if you have 3 losses in a row, you might go, something's wrong. So one thing to do is you put a limit on your day of how many losses in a row before you stop. Or you can do a dollar figure, because the reason for that is, you start to get emotional and you trade to try to make back money instead of really what's there, right? So, I came up with this idea and I said, well, if I have 3 losers in a row, I'll stop and I'll make one more trade at the end of the day if I feel like I'm mentally okay and I'm in, I think I've got a handle on it. If I make money, you keep going until you have your first loss, right? So then you might even make 4 winners in a row. But you have to, control your discipline and emotions, because there's some days that the market is, your system might be trending and doing real well, whatever system you pick. And other days it might not. So, and you don't know how many losers in a row that might end up, right? When I would give these lectures years ago, whether it's a seminar for the CME or a workshop, I used to love asking everybody in the audience, how many put a number of how much they want to make on a day. And almost the entire room raised their hands. I find it really interesting. And then I said, well, how many put a number on where you stop trading of how much you'll stop trading based on how much you lose? And maybe 3 out of 200 people raised their hands. And I'm like, okay, what's wrong with this figure, this picture, right? And basically what you need to do is, that was another thing I put on, at times it was around 5,000 when I was on the floor. Like if I lost more than 5,000, I felt like it wasn't huge, but it was enough to where I didn't like having a $5,000 loss and going home. So you're probably going to unconsciously start to trade and do, do some trades that are really fabricated in your mind, or unconsciously you just want to make money. So you start creating trades that are, um, very marginal. So that's why if you put a number on how much, you feel, where you feel uncomfortable, it could be 500, it could be 200, and you stop, but you don't put a number on how much you want to make, because if you are making money and you have 3 or 4 winners in a row, maybe one loser, but you're still uptrending and doing very well, why stop, right? The analogy, it's funny, I made this analogy once about this, and in the audience, I don't know if he's out there right now, but he was a uh, professional baseball player, played for the Cubs and the Yankees and all that. He started a trade when he retired. And he thought, I helped him because I used a baseball analogy. So if a pitcher goes into, into his first inning and he starts pitching and he loses, I don't know, gives up 4 runs, right? Almost immediately the coach is going, whoa, what's going on? If in the second inning he's not looking good, a coach will pull you out because he's like, it's just not his day. He's not in the zone. Doesn't mean he's a bad pitcher. It's just not his day. But if he's striking out inning after inning, he, I think everybody has seen this before, where the same pitcher might be in there the entire game or at least 5 innings or 6, right? So that's because he's in the zone. Why pull him out? Why put a cap on it? So same with basketball. Remember when um, Jordan had his, highest scoring game? He was in there the entire game. He barely pulled him out, even to Russ, because he was making shots off one foot, ready to fall down, and they were going in. And he even turned around to the audience and went, "I don't know what's going on, but that was lucky." So um, these are a couple things to keep in mind. Ask yourself, what number is it that makes me feel uncomfortable? If it's $1,000, okay, you lose $1,000, pack it up, just watch the markets or take a walk and maybe come back and make one at the end of the day, or don't trade at all. Because tomorrow, the next day, you might make 2 or 5,000. But if you really don't feel comfortable with losing $1,000, you're not going to trade with a clear head, and you're probably going to overtrade. The other question I ask everyone is, when you have your losing days, do you feel you trade 3 times as much, 4 times as much? And almost everybody raised their hands. I said, well, that is the problem. On your winning days, you cut it short because you want to keep the money, and you go, whatever, play golf or do something, and you leave for the day. On your losing days, what makes you think if you're losing money, you're going to be able to trade with a clearer mind? You're not. I'm just telling you from my own experience. Uh, and so these are interesting things to consider. So let's see. What do we have? Any questions here? Okay, daily loss limit, percentage of the account, right? Well, when I first started in 1977, I worked in the cattle pit, and I worked for a big spreader. And I was just so interested in the market. I got immediately addicted to the markets after a year and trying to figure out everything, ask a million questions. So I asked my this spread broker that I got a offer to work for him after my first year. And I worked in the pit, and I asked him, I said, do you trade for yourself? And he says, I do. And I said, and what's your win-loss ratio? And he goes, 50-50. I said, that doesn't make sense. It's like red and black on roulette. And he says, yeah, well, I risk 500 to make 1,000. So if I make 50% of the time, what do you think? And I went, I never even thought about that, right? So it's not about how many trades you make versus losers. It's about how much you keep when you're making your winning trades and what do you risk on your losers. So it really depends on what kind of system that you're looking at, if that makes sense. Um, so now, for sure, most of the time when I put in trades into the room and that, I'm being very conservative because I'm here to also, just give you some trading ideas, keep you in the right, frame of mind, not to overtrade. And, we're really here just to give you trading ideas. If you want to follow some of the trades I put in the room, we're transparent. It's totally up to you. No one's forcing you, no one's guaranteeing you that. But at the same time, sometimes it's helpful, whether it's us talking about, you know, a move or something, or we have some great traders in the room and they might say, I think the market might go here or there. And if it makes sense to you, you can do it. But eventually, you definitely want to first have your own style and decide what works for you, and that's pretty important, right? So when I draw the lines on the chart that you see, uh, there's a question about that. These are decision areas, right? Of where I feel the market stopped at one point, could could have resistance. For instance, let's take today, right? I'm going to go ahead and we stop there. We stop there. These lines, these levels were important to me. It's just where I think the market will respect or at least resist it for the first two tries, or or if it goes through it, could get some acceleration. Where I feel the market is important, right? So these are decision levels. This is window trader, fantastic market profile, but you can do these on bar charts too as well, and you can see the overnight market held this US session low. We held this low down here, 18 and a half, almost right to the T, the right up to the point there, the price. And then this high volume area, right, that we have right here, the market stopped short of that. Okay, the PLC, the point of control, where most of the trading takes place, is like, it's very important. It attracts or detracts. The overnight highs and the overnight lows are very important because if they reverse there, like a pocket, there's a reason for it. So a retest of it is, something to watch. And if we fail at the retest, then we go the other way. It kind of like what happened this morning. Originally, you know, the overnight market actually tested the U.S. session market, but fell short of taking it out, and it returned higher, right? But once we took this out, which was two data points very close to each other, we went to the next level and we held that level. So I watched the price behavior at these major levels. Are we testing it with volume, with some momentum? Are the internals, showing, um, are they correlated with the move we're doing? I mean, are we making high ticks when we're actually moving higher, or is it not? There confirmation between the two? You can look at it so many different ways, but price behavior around major levels are important. So I draw these in early. These overnight levels that we have, right? I break them out into Asia and Europe as well as the US session for good reason, because I want to know when highs were made. If you look at a 24-hour chart, you can't really break it out too much. It's kind of, how were those highs made and when? If they were made during the overnight session, they're not as important as the US session highs. Well, this was a huge trap up here because We made a higher high in Asia and then in Europe. But what do we do when we opened up the next day? We failed. So what happens is you get longs in Asia, longs in Europe. We open up a little bit short, and these longs here all look to cover, and it causes this huge sell-off. And usually when that happens, it's pretty quick and hard. You can see if I open this up. Let me just do this for a second. You can see what happened. First 30-minute period, we made the highs, lower highs, and we pretty much single time frame most of the day, all the way to the lows. But when we did that, as we're going down, once you get below these to these single prints, it's like a slippery slope. The market picks up momentum. And this was the original breakout right here. And that's what we did. All right. I'll come back in a little bit, answer some more questions. And I think I do feel like I can answer some of these execution questions and how to manage your trades. I think that's an important discussion. All right, I'm right here. I'm just gonna take a look at all the markets, see if there's anything to do, and hopefully this was some kind of help. This trading room, part of what we want to do, especially, we won't be doing it forever, is to give you something to improve your trading, something you can walk away with and use, and also enlighten you in some of the things behind the scenes that you might not know. Whether it's expiration days, it's the volume, extended volume, buy and sell divergences, whatever it might. There are certain things you might not be aware of. Scanners or whatever it might be, execution, management skills, how the market, moves, at certain times a day. Day functions are real important. And Kyle is very good at that, bringing those up. But, the time of day for me is very important. It's always been. When I was on the floor, one thing I used to do, it's kind of funny, is I would take my break at 10:30, which is 11:30 Eastern, go have lunch, take a walk, get out of the exchange. And I wouldn't really start trading when I came back until about an hour and a half before the close, because during that time, the volume would be quiet. Traders were stepped out of the pit. There wasn't enough volume to take it to new highs and get follow through or new lows. It was kind of just a little bit of a chop. So if you take out the chop in the middle of the day, you might be better off. So time of day is pretty important. All right, I'll be right here, and then maybe later we can do a little bit more chit chat. All right, it's Friday. Let's have some fun and finish the day off with some more trades.